Hey CMA buddies, let's continue with 10.5. If you remember, we have covered some topics like behavior control, output control, various types of levels of strategic controls, and the strategic control system going in the reverse order. Now today we will continue with 10.5, and today we will be talking about something called as strategic controls. So when I talk about strategic controls, there are four types of strategic controls. The first one is premise control. The second one is strategic surveillance. Then you have something called as special alert control, and then you have something called as an implementation control, right? So first one is premise control. So what exactly is a premise control? So strategy is basically built around several assumptions or predictions. So whenever you build a strategy, it is built around several assumptions and predictions. This is called as a planning premises, right? This is something which we have discussed earlier also, but just for a recap, if a strategy is built around several assumptions and predictions, it is called as planning premises. So what does premise control actually do? First of all, this control checks systematically and continuously whether the assumptions on which the strategy is based are still valid. So basically you build a strategy of premise control around some assumptions or predictions. So the first and foremost role of this control is to check systematically and continuously whether the assumption we spoke about here on which the strategy is built are still valid or not, right? Then thereafter, if there exist any invalid assumptions and they are detected and rejected, the sooner the better are the chances of changing the strategy. So once you realize there are some kind of invalid assumptions, what you do is you detect it. Once that is being detected, you reject it, and the sooner you reject, you basically have a better chances of changing the strategy, right? So if there is any wrong strategy due to invalid assumptions, basically premise control can help you do that. Premise control is concerned with two types of factors. This is very important. What are these two types of factors? One is environmental factor and one is industry factors. So let's just elaborate on these two. First is environmental factor. What exactly is an environmental factor? For example, your inflation rate, government regulations, social changes, etc. Although the firm has little control over these factors, they have a considerable influence over the success of the strategy because strategies are based on key assumptions about them. So although these are beyond your control, what exactly are environmental factors? These can be rate of inflation, government regulations, or social changes. You don't have a control over it, but they have a significant influence over your strategy success because strategies more or less are based on the key assumptions about them, right? So that's why environmental factors are very important when it comes to premise control. The second type of factor that is very important from premise control point of view is industry factors. Industry factors can be competitors, suppliers, buyers, substitutes, new entrants, etc. Some of the industry factors about which assumptions are made. This is more or less much in your control if you compare it with that of an environmental factor, right? So these can be they can be competitors, suppliers, buyers, substitutes, new entrants, etc. And these are the factors for which you can make assumptions relatively easier as compared to the environmental one. If any of the assumptions go wrong, strategy may have to be changed. That is but obvious, right? So what exactly is premise control? It is built around several assumptions or predictions. So the term you really need to remember in terms of premise control is something called as an assumption, because this is based around the assumption only. First of all, this control checks systematically and continuously whether assumptions on which strategy based are still valid. If you find any kind of invalid assumptions and they are detected, sooner you reject it, better it is, because that will help you to change the strategy. Two factors you need to remember. One is environmental factor, second is industry factor. Environmental factor talks about inflation rate, government regulations, social changes. You don't have much of control over it, but still it has a significant influence over the success of your strategy because strategies are based on key assumptions about them. Then second one is called as an industry factor. They can be competitors, suppliers, buyers, substitutes, new entrants, etc. And they are some of the factors about which you can make the assumptions, and if any of the assumptions go wrong, strategies may have to be changed, right? So when we talk about strategy control, the first thing is premise control, and that's something we have covered in detail. Now we move on to second one, that is called as a strategic surveillance. What do you exactly mean by surveillance? Surveillance is nothing but surveillance just means close observation. Keen observation or close observation of something is called as a surveillance. So what exactly you mean by a strategic surveillance? Broad-based vigilance activity in all daily operations. Vigilance also means the same as surveillance, that is close observation. So broad-based, that means on a bigger picture you got to figure out the vigilance, or you have to have a close observation on the daily operations. both inside and outside the organization. So you got to make sure that the vigilance is both within the organization and outside the organization. With such vigilance, the events are likely to threaten a course of particular strategy that can be tracked. So with vigilance, what it helps is events that are likely to threaten a course of a particular strategy, you can basically keep a track of that. How can you do that? This can be done through various business journals, trade conferences, conversation observations are some of the information sources for strategic surveillance. What do you mean by conversation observation? It simply means paying close attention to understand the dynamics or content or context of an interaction. So conversation observation is one of the key role. Similarly, business journals, as in various business magazines, can help you to know what exactly is happening in the market. Similarly, trade conferences that are happening, these can be some of the information sources as far as strategic surveillance is concerned, right? So basically, it's a kind of close observation, what you call as a vigilance. So under strategic surveillance, you have a broad-based vigilance activity with respect to the daily operations. This can be both inside and outside the organization. With such kind of vigilance, what it can do is events are likely to which are likely to threaten a course of a particular strategy can be tracked. This can be done through business journals, trade conferences, and conversation observation, right? Third one is what? Third one is special alert control. Now what does it do? Sudden or unexpected events can have a significant impact on the firm strategy, which may trigger immediate and intense reconsideration of firm strategy. So something which is very unexpected or something which you didn't expect to happen or very sudden in nature, that can have a very significant impact on the firm's strategies that you have designed. So what it can do is it can trigger, or it can basically lead to something within no time, an immediate and intense reconsideration of firm strategy. That means you have to rethink your firm strategy. So that's what special alert control can actually help you with. For this, usually firms develop contingency plans. So if you have to deal with special alert, then in that case you create something called as a contingency or an exigency plan, along with crisis teams to respond to such sudden or unexpected events, right? Simple example can be, if you would have read the news, US basically what they have done is they have imposed heavy tariff on India, that is 25% plus some 25%, so 50% and all. So now there is if you are an exporter and you send a lot of goods to say US and your major revenue comes from them. Now this was very much unexpected. It happened suddenly. So now you got to redesign your strategy so that you are able to cope up with the changing environment. So this is very sudden or unexpected. Now you have to create an exigency plan or a contingency plan. So basically what you can do is you can look for other countries wherein you can do your exports and cover up the losses that you have made in respect to the US exports. So that's what is special alert control kind of. And finally we come to the fourth kind of strategic control, that is called as implementation control, right? So what exactly is implementation control? As the word itself says, resources are allocated. So how do you implement a control? The way you allocate your resources, people are put in the right places, special programs are undertaken, and functional areas initiate strategy related activities. So this is what is implementation. You implement something. So how do you implement something properly? By allocating resources in the properly, then putting people into the right place. You can also undertake special programs and functional areas, the operational areas which initiate strategy related activities. Fine. So what does implementation control actually do? They aim at assessing whether plans, programs and policies, that is triple P, plans, programs and policies, are guiding the organization towards the predetermined objectives or not. So the idea is you got to have proper plan, programs and policies for achieving the predetermined objectives of the organization. Assess whether the overall strategy should be changed with respect to results of specific units and individuals involved in implementation of strategy. So idea of implementation control is you got to assess the overall strategy whether it should be changed or not with respect to the entire unit also and with respect to the individuals also who are involved in the implementation of strategy. So you got to redesign structure if needed. Then there are two important methods to achieve implementation control. What are they? One is monitoring strategic thrust. Fine, that's the first thing. And second one is milestone review. So these two terms you got to remember when it comes to implementation control. Two methods you basically deploy. One is monitoring strategic thrust and milestone review. So what exactly is managing strategic thrust? First is small critical projects that needs to be done if the overall strategy is to be accomplished. So you basically execute small kind of critical projects that are to be done for what? For attaining the overall strategy, right? They are critical success factors. CSF, this is something you would have learned earlier, but this is something I've already covered in my video also. So you can have a look at that CSF. They are critical success factors in the success of strategy. So that's what is managing strategic thrust. So simply, if you got to remember what is managing strategic thrust, just remember that you got to have small critical projects that needs to be done for what? For overall strategy accomplishment. They are critical success factors in the success of strategy. Then second thing we talk about is something called as milestones. What exactly is milestone? Critical events that should be reached during strategy implementation. What is milestone? Milestone is basically your ultimate objective. So these are basically the critical events that should be reached during the implementation. Which implementation? Strategy implementation. These milestones may be fixed based on critical events, major resource allocation and time frames. So three things you got to remember when we talk about milestones. They can be fixed based on three things. One is critical events, second one is major resource allocation, and the third one you talk about the time frames or the time limit within which the strategy has to be implemented. Example of milestones is PERT or CPM, something you would have learned, that is project evaluation review technique or critical path method for project implementation, something you would have done in operational management, right? If you haven't, then obviously that would be a part of your curriculum, right? So two things please remember when you talk about implementation control. Two things are very important. One is monitoring strategic thrust and second one is milestone review. Managing strategic thrust is all about small critical projects that needs to be done if the strategy is to be accomplished, right? And its second thing is milestone. Milestone is nothing but events that should reach or other critical events that should be reached during strategy implementation. These milestones may be fixed on three things. One is critical events, then is major resource allocation, and third one is time frames. PERT and CPM can be the best example of implementation control. Milestone review help managers to assess strategy, whether to continue or refocus the firm strategy. So milestone review, what it does is that managers can basically assess the strategies that they have undertaken and whether they should continue with that or refocus the firm strategy. That means, is there any need to change the strategy? Implementation control is also done through operational control systems. How you can do through operational control systems? For example, like budgets, schedules, key success factors, etc. So that's how you can do implementation control, right? So the four things that we have learned under strategic controls, there are four types. One is P, that is a premise control. Then second one is strategic surveillance. Then again there is an S, which talks about what? Special alert control. And finally we talk about I, that is implementation control, right? So this is what implementation control all about. So what you can do is you basically can allocate resources, you can manage strategic thrust, milestone review is other thing, operational control is important, and you got to assess the strategy, right? You can have a look at this figure. Basically this will give you an idea or rather recollect all the points regarding implementation control. Now what are the various approaches to strategic control? So till now what we learned is what are the various types of strategic controls. Now what we will be learning is how do you approach a strategic control. So there are basically two types of approaches. One is called as a traditional approach with respect to strategic control, and the second one is called as a contemporary approach, right? So let's look at what exactly is a traditional approach. So traditional means an older way of doing it. So what are the various steps when we talk about traditional approach? Traditional approach simply says strategies are formulated and top management set the goals. So you formulate the strategy and the goals are being set by the top management, then they are implemented, then performance is measured against the goals, and finally corrective measures are taken if there are any deviations. That means you just digress from the actual objective, right? So when we talk about two approaches, the first approach that you talk about is called as traditional approach. So what are the various steps involved in it? First of all, strategies are formulated and top management set the goals, then implementation happens, then your performance is measured against the goals, and corrective measures are taken if there are any deviations, right? Now what are the various limitations of this approach, that is traditional approach? Process involves lengthy time lags and often tied to a firm's annual planning cycle. That means time lags means it may be deferred a bit. That means there can be a delay in the execution of the process, and basically it happens only once in every annual, as in this activity is undertaken annually, so that can lead to lag. So it basically can be a very lengthy process per se. Since this strategy is not proactive, what do you mean by proactive? Proactive simply means controlling something than just responding after it has happened. That means What is proactiveness? For example, you know, there has to be a class that is going to happen, and you already prepare for it and go to the class, so that is proactiveness. So this strategy is not proactive. So here what you do is, rather than taking steps, rather than taking the initiative itself, you wait for things to happen and then you go for the corrective measures. So that's the problem with traditional approach. It is not sufficient to control a strategy. Since the strategy is not proactive, it is not sufficient to control a strategy. There must be a continuous evaluation of the planning premises, something we have already discussed, and strategy implementation in order to get the desired results, right? So what are the various limitations? First of all, it's a very lengthy process. There's a lot of time lag, and it is often tied to a firm's annual planning cycle. It is not proactive, so it is not sufficient for you to control a strategy. There must be a continuous evaluation of the planning premises and strategy implementation in order to get desired results. So two things you got to have a continuous evaluation for. One is planning premises and the second one is strategic implementation, so that you have the desired results. So that's what is traditional approach all about. So beautifully represented with this figure. First of all, you formulate strategy, then what you do is you implement strategy, then you measure the performance and you take corrective actions, right? Then you talk about contemporary approach. What exactly is contemporary? It means adapting to and anticipating. That means you adapt to, anticipate means you foresee both internal and external environment. So that is more proactive in nature. Change is an integral part of this approach. So if there is any kind of change that needs to be taken place, that comes more under contemporary than under traditional. This approach addresses the assumptions and premises that provide foundation for the strategy. So again, this is based on two things. One is the assumptions and the premises. Premises of what? That provide the foundation for the strategy implementation. It involves two key actions, right? What is the first action? It says managers must continuously scan and monitor the external and internal environment. So that's the first thing. So when I talk about contemporary approach, the first thing that managers is supposed to do is you got to continuously scan and monitor the external and internal environment, because it's completely based on the assumptions and the premises. And secondly, managers must continuously update and challenge the assumptions underlying the strategy. So you got to update and challenge the assumptions underlying the strategy, then only you can take proactive measures, right? So this is contemporary approach all about, right? Please remember this, very very important. Strategic control requires contemporary approach. So when I talk about strategic control, what is important is contemporary approach, whereas when I talk about the operational control, it is done through traditional approach. So strategic control has a direct correlation with the contemporary approach, and operational control has a direct correlation with the traditional approach, right? So what are the two types of approaches to strategic control? One is traditional approach, wherein we have 4 steps already discussed. Just have a look at the limitations. And then we have something called as a contemporary approach, and this is all more proactive in nature. There are 2 key actions that are involved. Please keep a track. Please remember, strategic controls requires contemporary approach, whereas operational control requires traditional approach, right? Beautifully summarized through this figure. So what you need to do is you got to do environmental scanning, then you have adaptive strategy, that is responding to change with foresight, and assumption challenging, right? Okay, now what exactly is role of strategic control, or rather what is the role of basically strategic control? Till now we have discussed what exactly is strategic control, what are the approaches, what are the types of strategic control. Now what exactly is the role of strategic control, right? Now when I talk about strategic control, first of all, designing a system that sets targets for all managers and employees, and that develops performance measures that encourage them to excel their quest to raise performance. Now what exactly is the role of a strategic control? Now strategic control, what it does is it basically designs the systems that does what? That sets targets for all managers and employees. So it basically gives you a target for managers and employees, and it also develops, that's so first thing is setting up of target. Second thing it does is it develops performance measures. So what performance measure? That will help them to encourage them to excel their quest. Quest means what? Quest means a search for something or to excel in something. To excel their quest to raise performance. So that is the idea of a strategic control, or this is the role of a strategic control. Then functional structure promotes this goal to increase the ability of managers and employees to monitor and make constant improvements in operating procedures. So what does strategic control, or the second thing that it does is basically the functional structure that it adopts, it promotes this goal by to increase the ability of the managers and employees to monitor and make constant improvements in this operating procedures. Then this structure encourages learning. Managers can mentor subordinates and help develop their technical skills. So what strategy control does is that basically it encourages learning, and what managers can do is they can guide the subordinates or mentor the subordinates, and they can help to develop them their technical skills. Now, measurement criteria can be developed to suit the needs of each function to encourage members to stretch themselves. That means it basically can help them to broaden their horizons or work more than what they actually do. So how does it does that? It does that by giving a criteria that is called as a measurement criteria. So measurement criteria basically can be developed how to suit the needs of each function to encourage members to stretch themselves. Each function knows its contribution in overall performance and part it plays in reducing COGS. COGS is what? Cost of goods sold or gross margin, right? So that is more of from an accounting point of view. So each function knows its contribution in overall performance. So every function knows what it's supposed to do with respect to the overall performance and what part it plays in reducing COGS. That means how can it cut down on the cost of goods sold or the gross margin. Rather, it should be how to improve the gross margin. So that's the idea of basically having a strategic control. Managers can closely monitor principle of minimum chain of command and whether or not they need several level of middle managers. So basically this helps managers whether they can monitor the principal chain minimum chain of command. That means there may be not a lot of hierarchy. There may be a minimum chain of command, and whether or not they need several level of middle managers. So either they can be a direct interaction. So that's one thing that strategy control can help you with. They rather use something known as management by objectives. If you have been a foundation student, this would have been a part of your curriculum. Even business studies students would know that. But rather, if you not aware, I'll tell you that the basic role of strategic control is they can rather use something called as management by objectives. What exactly is management by objectives? System in which employees are encouraged to set their own goals and managers intervening only when something is not right. So the idea is, when I talk about management by objective, is that here the employees are encouraged to define their own goals or set their own goals, and managers will only interfere or intervene when something is not right or the objectives are not being attained, right? So that's basically is management by objectives. So these are the various roles of strategic control. Let's just recap. First of all, management by objectives. That's the last thing we read. Employees set their goals with minimal manager intervention. Then contribution awareness. That is, functions understand their role in overall performance. Fine. Then measurement criteria. It is tailored to encourage functional stretching. Right. If you remember this point, wherein we talk about you can stretch your measurement criteria can be developed to suit the needs of each function to encourage members to stretch themselves. That's what it focuses on. Then learning encouragement, because managers mentor and develop subordinate skills. It can be technical as well. Then functional structure, because it promotes monitoring and improvement of procedures. And finally, performance targets, because system sets targets for managers and employees. So when we talk about the role of strategic controls, these are the key points that you need to remember. One is management by objectives. Second one is contribution awareness. Then the measurement criteria. Fourth one is learning encouragement. Fifth is functional structure. And the sixth one is performance targets. Right? We come to the last part of the video today, and we will be talking about guidelines for proper control. So what are the various guidelines for proper control? So if you got to have a proper control, there are certain guidelines that you need to follow. First one is control should give only minimum amount of information required to give reliable picture of events. So there should not be an overdose of information. You got to give crisp information. That means whatever is required, that is minimum amount, that is more than sufficient. That would give a reliable picture of events. Now, too many controls what it can do is it can create a lot of confusion. So please follow something called as Pareto analysis, that is 80-20 if you remember. That means 20% factors determines 80% of results. Fine. So Pareto is something that you need to follow. That means you got to give minimum amount of information to get a reliable picture of events. Right. Second one is control must be reasonable. Frequent and rapid reporting may frustrate control. So you should have a reasonable control over things. If you keep on demanding too much of reporting or frequent reporting rather, that can frustrate the people or the control itself. It should be applicable to those who apply them. So it should be walk the talk. So if I say something, even that should be followed by me also. So that's what is, it should be applicable to those who apply them. It should monitor only meaningful activities and results. Right. So something which is more concrete, that is something that should be monitored. If cooperation among divisions is important, Some forms of qualitative or quantitative measures should be established to monitor cooperation. So there should be a cooperation between the various divisions. Now what it does is, if cooperation among divisions is important, then some kind of qualitative or quantitative measures should be established for that. Should be flexible in order to adapt to the changing circumstances, right? That's what proper control should be able to do. Should be timely, so that corrective actions can be taken before it is too late. Controls that monitor the factors influencing performance should be stressed, so that advance notice of problem is given. That means controls that monitor the factors which influence the performance, they should be focused on, or there should be a lot of emphasis on that, so that advance notice of the problems can be detected or it's being given. Long term and short term controls to be used. So control should not be just of one type. It can be both long term and short term, and that should be used for having a proper control. Should be aimed at pinpointing exceptions. So you should be able to have a microscopic view of the exceptions. How? Only activities or results that fall outside a predetermined tolerance range to be called for action. So something which is within the range, some deviation is slight deviation is basically allowed, but it becomes too much beyond the tolerance range, then you need to take adequate action in the proper frame of time and in a proper manner. Emphasis must be on rewarding of meeting or exceeding standards rather than punishing on failing on meeting standards. So basically your focus should be more on rewarding something when you exceed standards, but if you fail to attain something, then you should not lay a lot of focus on punishing those standards, because that can be there can be a lot of demotivation because of that. Latter can lead to global goal displacement. What it does is that basically you will start digressing from the goal. Managers, what will they do is they may fudge reports and lobby for lower standards, because you are punishing for all the wrong deeds that you are doing or not able to meet the standards. What managers will do is that basically they can manipulate the reports and they can adopt to lower standards. So that's one thing you should refrain from, right? So these are the various guidelines for proper control. So looking at the diagram, we can recollect what are the various effective control strategies, or what are the various guidelines for proper control. First of all, minimum information, that is 80-20 rule, or what we call as Pareto, right? So you focus on essential data to avoid confusion. There should be reasonable frequency, that is balanced reporting to prevent frustration. So there should not be a lot of information being called for. You basically should make the reporting in a timely manner, not very frequent reporting. Applicability, ensure controls are relevant to users. Meaningful activities, that is monitor only significant actions and results. Flexibility, you adapt controls to changing circumstances. Timelines, act promptly to address issues. Long term and short term, use both type of controls for comprehensive oversight. Exception pinpointing, that is identify deviations from expected outcomes. And positive reinforcement, that is encourage success through rewards and try to minimize punishment on not meeting the standards. So this is what is effective control strategy or various guidelines for proper control. With this we finish second part of 10.5. I know it's a lengthy chapter. I've tried to cut down as much as I could. The language, I hope, is pretty much easy for you. Even if you at the time of exam, if you want to recollect, just have a look at these figures. That is more than sufficient for you to recollect whatever points we have actually learnt in this video. Thank you for joining, and hope to see you very soon with the next video. Happy learning and take care of yourself.